Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Eurodollar. An indecisive doji cross on Friday after the previous session's bullish white Mariposa and third bullish white soldier yesterday. This was a second close over the very recent mid-June to late July bright red ascending wedge pattern, currently 114.27 to 114.99, as well as over the regular green short medium moving average, currently 114.89, plus the small congestion between 114.82 to 114.95. That's made up from the January and February 22 highs respectively. As a result of all this, I have now laid out targets topside for a break above the ascending wedge pattern, and also for the mid-June to end of July double bottom pattern, Adam and Eve type. That's of a primary target X2 up in the 115.91 area, and a secondary hard to reach target X3 up in the 116.40 area. It is interesting to note that the market stopped short of testing the next overhead resistances, and that's of the bright green upper time, which is currently at 115.46 of the big picture bright green late January to mid-April bearish shift pitch hook, which is the main driver in this market right now, as well as the flatlining mauve medium moving average currently at 115.68 and the 2019 high at 115.70. I just hope these topside targets fare better than the ones for the false break below seen the last week or so. There's one other pattern to consider, and that is the weekly key reversal up seen here last week. Now, so far today, a further attempt higher today, breaching the bright green upper time, but stopping short of the mauve medium moving average and the 2019 high before pulling back down again below the bright green upper time, though not as far as the broken bright red trend line of the broken ascending wedge pattern. Cable, aka sterling against the US dollar. A third bullish white soldier on Friday after the previous session's second bullish long white Mariposa. Prices, unsurprisingly I suppose, utilized the combination of flatlining mauve medium moving average, currently at 134 even, and the gold long moving average, also 134 even, as a base for a further attempt higher, once again through the 2024 high at 134.34 and the breach topside dark blue upper time, currently also at 134.50. And that's of the dark blue late January to late April bearish shift pitch hook, one of the two recent showrunners here. The move up petered out at the slowly declining bright red, many times breached and broken but seemingly repaired, start of July to start of August 2025. This is shallow bear channel, currently 128.57 to 134.84, closing just under the upper bright red channel line after briefly breaching it. In the bigger picture, we are in between the other showrunner here, between the purple lower time below, currently at 132.81, and a purple middle time above, currently 136.68, and that's of the purple late October 25 to late March 26 bullish shift pitch hook. Now, going back a minute to the moving averages, the previously mentioned mauve medium moving average and the gold moving averages, along with the green short medium moving average, that one's currently at 133.66, all these three together had a bearish looking bow tie formation on about the 15th of July. Thus, as a result of this pattern, we might see some volatility a bit between about the 5th to the 12th of August, so watch out. Finally, prices made a weekly key reversal up here last week, though there has only been a limited follow-on move higher this week. So far today, a small follow-on higher, breaching the September 2020 high at 134.83, as well as the bright red upper bear channel line. currently at 134.84. And that's of the July 25 to date, many times breached and seemingly many times repaired bear channel. This is not a great pattern as it has been breached a number of times, both above and below, but it's still nevertheless there. US dollar against the Japanese yen. Another hell of a move with a really long bearish closing black Mariposa on Friday after the previous session's hell of a long bearish long black Mariposa. Once again, prices pushed down through all sorts of supports, notably the gold long moving average, currently 158.03, and the bright pink lower time, currently 157.94, of the bright pink early February to early May bullish shift pitchfork, closing just below both of these. We now have limited supports below, bar the congestion 155.78 to 155.84, around the June 1990 low at 155.78, and then the early May low, the last time we saw concerted selling here, and the base of the rise throughout early summer at 155.03. Perhaps the most interesting thing of all was this gave further credence to the break below the bright red September/November 25 to July 26 bull channel, and that became an ascending wedge pattern, and that's currently 160.07 to 165 even. This break lower now gives a primary target X for this pattern down in the 153.72 zone, with a secondary much harder to reach target X1 down at 145.45. These are obviously longer term targets, and some would argue extraordinary targets, but they are still nevertheless targets for this pattern. Finally, there's one other observation I'd like to make, one I made last week, and which is worth noting and remembering. Plus, it is a seasonality one, though one I cannot verify until at least October. If you look at my daily chart, you can see that we have had a big move down in late January, then another 3 months later in early May, and then another one last week, about 3 months after the prior one in early May. To have 2 such moves down would be a coincidence, but to have 3 such moves, each timed at approximately 3 months separation, well, that indicates a possibility of the beginnings of a pattern. Hence, I would ask you all to please pay attention towards the end of October and the first few days of November this year, in case we have a similar 3-month heartbeat pattern lower. Finally, please note on Friday we made a monthly key reversal down in July, something I cautioned about last week, for all the implications that comes with such a move. Now, so far today, a gapping lower open since filled in, with a further strong move lower in a somewhat sparse zone of support, through the congestion around the June 1990 high and almost reaching the May low at 155.03 before pulling back up, but not as far as the previous close. US dollar against the CNH, the offshore Chinese yuan. A reactionary bullish harami on Friday after the previous session's second bearish black crow. Prices moved back up, if only just within the recent makeshift bear channel. It was made by the green short medium moving average above, currently at 677.94, and a dark blue middle time below, currently at 674.84. And that's of the mid-January to early March mildly bearish shift pitchfork. This mildly bearish pitchfork has been the brilliant showrunner here since late winter, and has done an excellent job in showing the bearish angle of attack of this market. It was also a move back up, if only just, over the 50% Fibonacci line, the big old May 20 to March 22 move at 675.06. It was still nevertheless the lowest low since February 2023, a further significant event. So far today, either side of the dark blue middle time and the 50% Fibonacci line, but only just on both. US dollar against the Brazilian real. An immediate countering bullish harami and bullish opening white Mariposa on Friday, after the previous session's bearish open and close black Mariposa. It was a move back up, but only up as far as the mauve medium moving average, currently at 508.30, as well as congestion at 508.16, before slowing down and closing just under both. Further above, we have the green short medium moving average, currently at 510.59, whilst below we have the May 24 low at 504.32, and a significant pair of 50% Fibonacci lines, with the July 19 to December 24 move at 501.48, and the October 18 to December 2024 move at 494.74. Overall, the market continues to move down nicely within the now veteran and very successful dark blue mid-December 24 to mid-April 25 bearish shift pitchfork. This long-running dark blue bearish shift pitchfork is still the very excellent showrunner here for this market. Prices are in between the overhead dark blue upper tie, which is currently at 516.29, and a dark blue middle tie below, currently 490.38. US dollar against the Mexican peso. An indecisive doji cross on Friday after the previous session's bearish closing Black Mariposa. It was still the lowest low since late June and confirmed Friday's breakout from the recent constrictions of the attractor of the 2017 low at 1743.74, along with the resistance above from the mauve medium moving average, currently 1744.37, and the green short medium moving average, currently 1739.53. In the bigger picture, prices continue moving along nicely in between the dark blue lower time below, currently 1721.72, and the dark blue middle time above, currently 1775.48. From the excellent showrunner here of the mildly bullish mid-February to mid-April dark blue bullish shift pitchfork. So far today, a further dip lower, but only a small one so far. With prices pulling back up again towards Friday's close.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.